415-412-592. Bum, bum. I'm live. I gotta start getting set up here. Let's go to Safari, and we need to change this back to this. I have Active Trader Pro starting up, and I have to turn on my Do Not Disturb, my focus mode. And I know I'm getting a late start. Do not hassle me. Do not hassle me at this point in time. I will not be hassled. I gotta turn down. Probably nobody's going to join based on the title. Morning, James. I'm glad somebody joined. I got to start up my garage band. At some point in time, I'll do the podcast. I actually did a cool... I wonder if I can show you kind of the desktop. You know what I'm going to do? Yeah. For you guys that joined early, I will share. Let me see. Can I share this? GarageBand. Let's see. Control Center, OBS, Spotlight. I guess I can't show QuickTime. Is it not going to let me show QuickTime? I don't think I'm going to get a copyright strike on it, but now playing? Is that the one? Default desktop, tracks, podcast. Larry? Morning, Mike. Tom's been posting in the Facebook group too. Status indicator. I'm trying to show you guys AirDrop box, Bluetooth. That's the control center. Let me see. Now playing. No, see, it doesn't do anything. Let's see. I want to show you guys. So I did this TM menu. What if I show you the desktop? Nope. Still doesn't do it. I don't know what does it, but maybe do I drop this into a web browser? Let's see. No, I guess not. Nope, doesn't open it up. I guess not. Yeah, I'll look at DO for you. I'll add it to the notes. I don't have them a lot. I've just got to go over. I've got my Friday recap. And there was one short squeeze that I wanted to look into too. I was trying to show you guys. I worked on a does now playing, let's see. Let me see if this works. No. That's my new opening, but I guess you can't see it. I'll post it. Maybe in the Facebook group or something. Cross-up post. Yeah, you want to see DRN? This is interesting. And remember, DRN is the real estate bull. This is the go forward up. It crossed the 200-day. It's a secondary cross-up. At 12.19, ironically, you'd be up 20% if you had bought in this $10 range. There's a gap up here at 16 that, in my mind, if we continue to go, this would be interesting. By the way, full disclosure, Chevron yesterday, crazy good quarter. or I'm sorry, crazy good buyback, crazy good dividend increase. Bad quarter today. They're down. I think they're down today. I can take a look. Let me look at Active Trader Pro real quick. I think they're down in pre-market, but it's just because they've run up so much. I don't have that in the core portfolio. I don't have it. I do have it in the. They're down at 185. It's not down by much. It ran all the way up to 190 in pre-market, and then they announced their earnings, and boom, it starts coming down. But let's do this. CNBC.com. Since Tom likes to poke, let's do this. Oh, I don't find things to know before the market opens. I want to look at CVX. Boom, boom, boom. And they announced early. After hours, they're at 185. Let us compare CHRD. And I haven't done this, so I don't know which one's right, which one's wrong. Let's go 5-year. Look at that. Tom's right. 5 years. Although, they just came about in 2021. But CHRD, 5 years, 216%. 5 years Chevron, 43%. Move in a little bit. Let's see. Interesting. One year. I should post that just to throw it at Tom. Look at the 1 year, Tom. Look at the 1 year. Tom's got 170 positions. I can't manage that many positions. No. Tom is also a retired doctor, by the way, who made significantly more money than I did, most likely. But he's got 170 some positions. I can't manage that. Tom can beat the algo. You know what? If Tom was that good, if Tom was as good as his ego allows him to be, why is he not Elon Musk? Why is he not the richest man in the world? Is it because he didn't have enough capital to start? Because if you're making that great of returns every year, he's funny. Does have an ego, it does seem like, though. I definitely do not. Oh, look who pops up. Look who pops up. And FYI, Jim Cramer did not graduate from Harvard. Let me see. Let's see. What school did Jim Cramer go to? Oh, I guess he did. Harvard Law School. Jim Cramer's not dumb. Jim Cramer's just a moron. I mean, he's a monkey. He likes to... My problem with Jim Cramer is not that he's bad at his job. He's just like everybody else. My problem is when Kathy Woods performed poorly last year, he made fun of her and said she should get out of the business, that she was just ridiculous and blah, blah, blah. Well, Jim Cramer, you don't post your results. What are your results? What are your results? I mean, I'd like to see the result. He charges you $600 a year, but he won't post his results. Here. And just in case you're wondering, we'll look at ARK K. This is the flagship of ARK. And we will compare. And I wish we could do Jim Cramer's fund, but BRK.B. And let's do year to date. So it's all about timing. It's all about perspective. Do you want Cathie Woods making you 23% year to date or Warren Buffett making you 1% year to date? But if you look at 1 year, Cathie Woods loses you 45%. Warren Buffett makes you 1%. If you look at 5 years, Cathie Woods loses you 4%. Cathie Woods loses you 4%. Warren Buffett makes you 46%. No, James, if you listen to Tom, he has gotten in and out at the perfect time. I think he has lost on some trades, but those are not ones that he posts in the Facebook group. I think he's good, though. He knows what he's listen, at the end of the day, he knows what he's talking about. I'm not in any competition with anybody. I will not compete with anybody either. It's a ridiculous thing to compete with somebody on stock trades because they're so personal. You're right on some, you're wrong on others. People who manage money are right on some and wrong on others. If you trust somebody with your money and they're not doing well and you take your money back, does that mean that you can do better? You know, I always have this argument with my parents. But yeah, I mean, it is all about timing on this. I should on the podcast. I don't think Tom does this, but I should on the podcast do this. I should say, here, we'll do CHRD. And we'll compare. We'll compare XOM. And we'll compare CVX. And we'll do 1 month. Let's say 1 year. So the shaded blue line. Hey, Tom, which one would you want? CHRD, 12%? Or CVX at 42? Or Exxon at 59? I can't do it on a Friday because his head will explode all weekend. Yeah, I mean, the S&P, again, if you I think I've beaten the S&P all but 3 years. And it was, 9 times out of 10, it was because of Apple. I mean, you look at, here. We'll look at SPY. No, it doesn't. It's just the performance of that. Again, the dividend probably pushes it up towards that. But if you look at SPY and you compare Apple, since Apple's such a big portion of my my portfolio, so here's SPY at 44. Here's a 5-year of Apple at 223. You can kind of see that Apple, other than a couple of years, has really beaten the S&P. And so my performance, it's not, scientific. It's not, oh my God, I'm such a great trader. It's Apple, but it's Apple, it's Tesla, it's ARK. It's all of those things. And those things is what underperformed last year against the SPY. So I underperformed. I lost, quite a bit. But let's see, year to date, SPY is up 5.8%. Let me look. I know I beat it so far, year to date. Year to date, I am up 9% exactly. So, I've doubled the S&P in the year to date, but it doesn't mean anything. You just want to track that. No. And James, it was an interesting one, an interesting discussion I had with David from Trendspider, and we talked about it for a while off camera. Wasn't on camera. But we talked about it for quite a while in that Apple has essentially made my fortune, allowed me to retire. It's kind of like Tesla. Tesla did what Apple did. Here, if you want to see, we'll compare Apple to Tesla. And you can compare Netflix to Apple, all of these kinds of things. But the question I constantly tell myself is when I stop using Apple products as much as I do, or look forward to the new products of Apple, I am not going to, that's when I'll start switching. Microsoft it's crazy because I've stopped using Amazon as much as I did. And I think that's just because I don't have an income now. I use my stock trades as income, so it's obviously lower than what I was making as a employed individual. So, I could trade more and I could make more money, but I just don't. But you can see Tesla. Tesla over the past, look at that. 2021, it was up 1,500%, and you've slipped all the way down to 587%. But there's Apple at 223. This is a 5-year chart. You've kind of filled that gap a little bit. But if I had bet in Tesla, look at Tesla here at 2020. I bought my car in 2018. Had I just invested in Tesla in 2018 and just thrown all my money into Tesla, I'd be far better off today. I threw more money into Apple. It's been a slow, steady climb. But I'm not switching off. I'll switch off when I stop using their products. When I start thinking, you know what, somebody does it better. I just haven't found anybody that does it better. Let's do some scans. I'm going to take some of the scans from this week, and we'll take a look at some of those stocks. Wednesday, Tuesday, here's Monday. Recap. Monday. Let me see, which ones did I? I'm going to take out the crazy ones. Intuit is one that I liked. Netflix. I continue to think that that's a good one. VEWay, IGM, Square I know has gone down. XLK, VXUS, XLC. Palantir's an interesting one, but I know we brought it up. CEG, I'm going to take that one out. Shitty Bank we have in there. Let's look at Tuesday. And no, I'm still leading people into Apple. I'm telling them to be cautious, but I'm still leading people into Apple. URTYVO Beyond. I told people not to buy Beyond, so I'm going to tell them. eBay was one. Okay, and then let's look at Wednesday. Bum, bum, bum. We looked at these. I'll go through all of these stocks that are algorithm recommended for the week, and then Thursday, boom, copy. Let me see. KDP. I'm going to take that one out. I like everything else in there though. Thursday, and then Friday. Scans. Oxy. I gotta put dollar signs in front of all these. Oxy, Target crossed up. Goldman Sachs crossed up. Devon crossed up. Let's see. That's just on our core portfolio. If you're new, by the way, hit the thumbs up. I forgot to hit thumbs up. Live chat. If you're new here, subscribe. Think about it. All those core portfolio ones, those are ones that I hold. I think we're going to get a lot of energy names crossing up. I do this every morning. If you're new here, every morning the market's open unless I decide to take a contract job. There's a lot down in pre-market. I'm looking over our core portfolio. Apple is down slightly. Bank of America is down slightly. Boeing is down slightly. Cleveland Cliffs is down slightly after being up. Getting that one around 20%. Google is down slightly. Moderna is down slightly, although I kind of think that you should trade that one. Microsoft down slightly. Palo Alto, which has had a crazy run. I should probably put NVIDIA. You know what? I'm going to put NVIDIA in the core portfolio. I don't have AMD. I don't have SOXL. I've been trading a lot of chips, and the one chip that I have in there is Qualcomm. But I think NVIDIA I'm going to throw it in the core portfolio. I do think that they are the leader. It's been crazy, some of the things that I've seen from them. It's in my not owned, so I'm gonna put it into the core portfolio. It just deserves to be there. Honest to God, if we go to the strategy tester and we look at the algo, it's been the most volatile name. You're in at 147. You're up at 197 right now. Intel's earnings is going to make this one. Let's see where we are in pre. Intel, essentially, Intel just collapsed. The company is just so poorly managed. Not from the top. Pat Gelsinger is trying to make changes, but just overall, they're just not a well-run company, and it kind of pushes me to think that NVIDIA, is probably a pretty good bet on this one. But I'm going to put them in the core portfolio. Okay, let's go back to scanning. We did the energy sector, and we're going to look at our levered ETFs. DRN we went over. DRN URTY, which is the Ultra Pro for the Russell 2000. That's a secondary cross up, I think. Let's run the algorithm on this one. Yeah, secondary cross up. You're in at 37 on this one. I think this one crossed up. SRTY actually crossed up on Wednesday. Let's see if it got you out. Nope. Still in at 44.88. You're down, what, 5%? Morning, Sherry. So AMD I own. I wish I didn't. NVIDIA, Taiwan Semiconductor. I think that's in our core. Yeah, you're right. TSM is not TSC, but TSM is in our core portfolio. AMD is not. And the only reason that AMD is not is they've come down. I own this one, and I own it at quite a larger price. Their PE is 45. The forward PE is 20. Year to date, they're up 16%. Now, I harp on PE. NVIDIA is significantly more expensive. The difference that I think, what is that R? Rising. Oh, look at that. NVIDIA just has better technology than AMD. I consider NVIDIA to be the premier gaming laptops, and I consider AMD to kind of be the Hewlett-Packard Lenovo, if that makes sense. But I think NVIDIA, with their virtual reality stuff, Jensen Huang, who's their CEO, I think it was on Wikipedia. It was somewhere. I mean, I just read a paper on him and so impressed. I mean, honestly, so impressed. And when he took that company public, I was like, oh my God. And that was the story about him taking NVIDIA public. I think on this pullback on NVIDIA, you could probably do it. Qualcomm, I still think, is the best one of the bunch. But as it gets up to the 130s and 140s, I mean, you still have only 11 PE. This is what's, NVIDIA and Qualcomm are, I think, the two leaders in self-driving. Qualcomm, it's not the leading technology in self-driving. I think NVIDIA has those chips kind of locked up. But Qualcomm's chips have been chosen by Volkswagen. So, I don't know why in the world I had to approve that from you, James, but I did. I can't argue that you had to get through the chip supply. And I think Intel still says they have a huge glut of chips. I don't know if that comes into play for the other ones. I mean, I think for Intel, you're looking at a $25 stock again. Let's see what they are in pre-market. Full disclosure, I am running this on an Intel iMac. Let me see about this Mac. I am running this on a 3.4 gigahertz quad-core Intel Core i5. So, the graphics card is a Radeon Pro 574 gigabytes. I do have 40 gigabytes of 2400 megahertz DDR4. So, that's what's essentially allowing me to run all this, is that 40 gigabytes of internal memory. I think if it wasn't for that, this thing would be at a crawl. I don't think it would be able to handle what I'm doing. But let's get back to our scans. Market's going to be open. I'm going to be here until freaking noontime with you guys. Levered ETFs. And you guys don't... What's funny is I'll be here till noontime, and by 9:30, everybody's kind of done, talking. Nobody chats. Nobody says anything. We had 3 Vanguard ETFs. This one, let's throw this into the strat. This is emerging markets. And with the weakening dollar, this has been October 36, and you're at 43 right now on a Vanguard ETF that pays you, let's say, VWO, 4.82%. 4%, you're gaining what? 20% in 3 months. The RSI is at 77. I ain't bringing this one up. I mean, I'll say it crossed, but long term, I think it's probably a decent bet. Let's look at the weekly and stuff. Let's look at the weekly. Yeah, you're still under the 200 day. Probably not a bad one to get into. I'll bring it up. What the hell? Do VWO and let's say VB, VNQ. Remember, for Vanguard, And I kind of I bring this up with you guys, but Vanguards, all you're looking for is entry into Vanguards. You're not looking to trade Vanguards. You're looking for entry. If it's in a brokerage account, you can use that to, I'm looking at all the oil. If it's in a brokerage account, wait for it to be long-term and, tax advantage that thing. So if, for instance, it's at, you bought it at 53, you gained and it's all of a sudden at 39, and you've held it for a year, and you maybe have some huge gains in other stocks, take this one out, write off the loss, and then buy it back after 30 days or buy something similar that's paying you similar. Just use it to your advantage. There will be losses. Losses can definitely be used. One thing I've learned over the years is losses can be used to your advantage, specifically around taxes. Now, in a retirement account, just buy it and hold it. Dollar cost average into it. When you get a chance to buy it under that 200-day on the weekly, just buy it under the 200-day. Keep adding to it. That's kind of, in my mind, I think that's the best guidance I can give you. Only one I own of Vanguard, though, is VOO. I try and keep, like I said, I try and keep it to around 35 holdings. And right now, I think there's just better places for your money to be, including some of the sector spiders. I think sectors are sometimes better than just a general. And I think sectors right now with the choppy market are better to invest in. That's what I'm scanning right now. Okay, so what did I need to look at? Let me see. I'm going to look through the chat. Can you look at DO? Okay. DO. DO is one. I did DRN for you. I'll do it in the thing. I don't, VOO is just, if you got a better place to be, I mean, I completely agree with Warren Buffett. If you have enough VOO in your account, pays like a 3% dividend or something? Let's see. VOO. It's just the S&P. Yeah, 1.6. Pays a 1.6. If you have enough, I mean, say you get $1 million of VOO. 10% is $100,000. You get $16,000 a year from just $1 million of VOO. Probably not something you can live on, but if you're 65 and you take that 16,000 and then you add 40,000, so you take 4% out of the $1 million and you just live on the 4%, that 4% is supposed to last you. It's supposed to last you somewhere in the neighborhood of, I think, 60 or 90 years. It's Google the 4% rule, because that's how people retire early. I don't abide by that. I abide by, if I've got the capital, I am going to make enough money to live on, and I am not going to touch that capital until I absolutely need to. Yeah, the Vanguard stuff, I mean, it's just, they've got volume. That 0.1%, expense, you can't beat it. Okay, we have XLV, which is, I think, that one crossed up yesterday too. How did that cross up again? It's on a sliding down. Let's see. And these are tough. These are super tough to kind of, even the spider sectors. Yeah, you can see it's getting you in and out, in and out. So This one, the algorithm, by the way, XLV, which is the healthcare, the algorithm makes you 21%. The buying and holding the asset makes you 14%. So the algorithm does better, but it's probably because of drawdowns. Okay, we've got 3 dogs walking without leashes. Oh, but there's the woman. I always worry about dogs in my... Now, I live on a cul-de-sac. Oh. Man, it looks like they're peeing on the lawn. My pups are going to go nuts. I always worry about dogs. I live on a cul-de-sac. The subdivision I live in, it's basically one street, 26 homes. And it's, you go down to the end of the street and there's a cul-de-sac to the right, cul-de-sac to the left. Simple layout. But we're on a hill. I'm at the very top of the hill. I get this great view of just woods, over the top when I stand at the top of my hill. It's gorgeous. And I'm glad I'm up here because in the summertime down there, it's hell. It's super, super hot down at the bottom. Tesla, by the way, up 1.53%. God, I missed that one. You know what I didn't miss? Target. Whoever didn't get into Target, boo on you. I know some, I think it was Barbara or somebody, or Jennifer or Michelle, one of the women, I remember she was investing, and I told her, she's like, should I buy it at 150? And I said, 143 was probably the price, but I don't think you're mistaken at 150. I think, with their management team and inventories, I think you get to cover this 170. Well, you're at 167. It's not going to go over there overnight. This is not something. Here's the killer. The algorithm over 1,000 candles, we can even do a deep dive. Let's do a deep dive. 7,000 candles. And remember, it's a 4-hour per candle. So it's 2 candles per day. So that's 3,500 days. Buying and holding makes you 423%. Trading target stock in the algorithm makes you 203%. So you have in 7,000 candles. We'll do medium. And remember, the algorithm's not meant to, long term. It's not meant to make you a lot of money. It's meant to guide you in trades, swing trades, and swing trades that are usually weeks, not days, weeks, months, whatever. But medium 5,000 candles. It's 2,500 days. What's that? 5 years. 131% versus 165% buy and hold. And we go down to shallow, 2,000 candles, 1,000 days. It's like what? 3 years? 183% for the algorithm, 132% for the buy and hold. And I usually do 1,000 candles because 1,000 candles, 500 days, which is almost 2 years. And the algorithm on target, 18% buy and hold. 18% algorithm, minus 8% buy and hold. So algorithm works. It does work. Now Tesla, if I go long on Tesla, we'll go long on Tesla. There's no way it beats it. 7,000 candles. Now, 7,000 candles, okay? The algorithm makes you 8,842%. It's impressive. Buying and holding makes you 12,375%. That's just legends right there. Yeah, you can't beat that. But shallow candles, if we go down to 2,000, which is what they recommend for shallow, the algorithm makes you 1,093%. Buying and holding makes you 659%. And that's because, for the most part, the algorithm has kept you out of, how does that work? Hold on one second. 2,000 candles. Oh, okay, you're still in. I was seeing something different. I said, why does the algorithm change? But you can see it tries to keep you out. It does lose you some. You make 7% instead of minus 41%, but you're still in it right here. You've got a small gap, by the way, from yesterday. So, man, those dogs are running around. My dogs would be going nuts right now if they saw that. I have UNH, by the way, as flat, but I don't think it trades a lot pre-market. I do think that 485 that we got in at, while you didn't time it, I just don't think that it's a bad place to be in. Okay, I'm not even going to do the ARCs because I don't care about the ARCs on a Friday. I'm going to look at the Dow 30. Anybody have anything that they want me to look into before I start the podcast? Because I got a ton of stuff to go over. I'm going to put all this stuff in the notes. I may not go over all of it, but I'll definitely go over some highlights. But my plans on Fridays is just to really go over, okay, what are we seeing in the market? Should we trade something? He did want me to look at comms. Let's look at comms. There was a report. Somebody posted in the private Facebook group that comms, COMS, was part of the naked short that could be coming in. And yesterday, it was ironic because they posted it in the afternoon. So I kind of see that they looked at, hey, it went from 70 cents to 91 cents. I'm sorry, it went up to 11 cents, which is a big move. $61 share. Okay, Larry, you're going to have to explain to me. I'm going to have to go to Investopedia intrinsic value. Investopedia, let's see. Because I'm just... How it's defined in the business world. Intrinsic value of measure of what an asset is worth. The measure is arrived at means, yeah, you're paying for the growth. If I want to find a value stock, let's go here. We're going to go to the screener. And I'm going to say, I don't care what exchange it's on. I'm going to click all. I'm going to say in the Dow Jones Industrial Average. Well, you know what? I'm going to do S&P. S&P 500. I'm going to do a PE. Let's say under 10. That gets us to what? 53. 53. Then I can say, what else do I care about? Let's say I want a dividend. I just care about a small dividend. I'm down to 49. I don't care what kind of dividend it is, but I want something that's, at least paying me something. I'm going to say 20-day simple moving average. I want it below the 20-day. Is there anything? We've got 5 symbols now. EQT, IVZ, 3M, Pfizer, and Verizon. In my mind, these are ones that, if we take a look at Verizon, for instance, let's take a look at Verizon because I think I did. By the way, Visa shows up in our scan. Let's take a look at Verizon, and we'll take a look at it on the algo. And this is how I would trade, by the way. Yeah. 61 a share and 190 is quite a difference, but I know you're paying for the growth. But look at Verizon. So you got out with a 6% gain. You had your 10% in that one. You're under 40. It's above the 200-day right there. But I bet if I go to the daily, it's using the 200-day as, yeah. See how it got close to the 200-day? Just wants to use it as a resistance level. You got this gap up here between 44 and 45. At some point, it comes to that. But that 9-day, it's just had too much of a run for a stock that has a huge dividend. Let's look at, I haven't even looked at Invesco, IVZ. Let's look at IVZ in the algorithm. This is one, ascending triangle. I mean, God, look at this. I mean, is that in the... That did really trade 1% yesterday. You're at 18. You came in here at 14, got you out with a 27% gain, got you out with a 1% gain. You're out of it right now, but that MACD's crossing up. Hey, Brandon. Brandon, I will fully disclose to you. I am glad that you just stumbled upon me. And I'm glad that you subscribed. There is another Brandon in here that uses his wife's YouTube account sometimes. So sometimes he comes on as Brandon, sometimes he comes on as Brittany. So I do call him Brittany bitch. So if I call you Brittany bitch, it is not to be disparaging or anything of that sort. It's just probably because I saw your name and just called you Brittany bitch. Larry is 6 weeks pregnant. Amazon over 100. Wow. This has been a legend trade. I'm telling you, Amazon with their earnings coming out February 2nd. See? Everybody's got a Brittany. Everybody's got a Brittany in their life. Amazon's coming up to its 200-day, which is 102 right here. God, what a trade. $83 right there. I wish I would have added more. Amazon's one that I didn't sell for tax loss harvesting though, and I made a lot of money off of Amazon, but I do hold it. But back to this screener. If you want value, you can find value. Just use Finviz. You don't have to subscribe to Trendspider for all this stuff. Now, Trendspider, I can go to the market scanner. Let's type in value. Fair value, Goldman Sachs overvalued stock. That's a custom one by my buddy. I guess they don't have a value. They don't have a value scanner. Fair value gap. Let's look. Let's look at the scanner here. It scans it for you, not based on any criteria. But this is just a fair value watch list. And what it does is it goes into a bullish and bearish kind of market scanner to pull up that list for you. But let's see. I can type in screeners. Let's see if screeners has any value. Fair value gap right here, screener. But I use the daily stock picks screener. Okay, PR. Let's see what PR is. Permian Resources. This is a fair value gap. Let's run it in our strategy tester. This is our algorithm. Let's see. I think this one has shown up on some of our scans. 898 and you're at 1192. Wow, that's a great trade. PRO, which is Pros Holding. I know nothing about this. 24.25, you're at 25. That's hanging on the 200-day. See how it's just bouncing around that 200? That's ugly. I almost lost 40K in 2022. How do I recover my losses? Throw it on the Bengals this weekend. You invest. If you lost 40K, you're not investing, you're trading. It's dangerous. I can tell you, personally, I lost way more than 40K. I wish I had only lost 40K, but the percentage that I lost was somewhere in the neighborhood of, I think, 27, 28%. My trading portfolio, I only lost somewhere in the neighborhood of 1 or 2%, if not flat. Still questionable because there were a couple that I kind of, I'll throw Palantir on there. Well, you know what? I'll do Palantir, ironically, Brandon, Palantir was on my Monday cross-up list. PLTR. I am out of Palantir. I was in on Palantir. I took this as part of my tax loss harvesting in December. So I'm prohibited from trading Palantir for 30 days. February, I can start trading. But Palantir is one. I mean, I like it at 645 on December 29th. It crossed up again on the MACD. You can see how it crossed down on Monday, January 20th. It crossed up again. And so it gave us a buy signal on our algorithm. I think you're going to have problems with the earnings. I think this is one where if people are cutting back, I love their CEO. I think their CEO is phenomenal. I just worry. Geez, look at this. I mean, that watch list is huge. I don't want to even look at that. Choose the list. Yours. Core investments. Twice it's hit that 200 day, and that 200 day is only at 748. Back here, October, it hit the 200 day. It's having problems holding the 200 day. These are 4-hour candles. Let's go to the daily, because the daily is what historically a lot of algorithms look at. This is just part of the data corruption that was on that day. But you're kind of moving up. You're not quite touching the 200 day. This gap right here that is between 1048 and 11, at some point that gets filled. It does get filled. I just don't know that it's in this run. I wouldn't necessarily, personally, I'm not buying a hell of a lot this week, and I haven't traded a lot this week. I think I traded GSN just because of the short squeeze and some stuff like that, but or it's GNS. But I haven't traded a lot, and the reason I haven't traded a lot is the Fed meeting next week. I mean, the Fed has basically said, hey, we're only going to do a quarter point, AKAN. Wow. Let's look at that one for Sherry. I just work my long-term portfolio. I'm just not buying a lot to get back in. Trading wise, I'm like, you can make some money. AKN is up 33%. Look at that 2-day. There's a 5-day. Let me move to a 2-day. It's right above the 200-day. The VWAP, it's trading right at the VWAP. What did this one do? Why is this up, Sherry? Let's look at AKAN. Aconda. Healthcare drug. Oh, it's drugs. Aconda reports first half 2022 earnings. There's no news. No position, just watching. Not loving CEO Twitter on rants. Took position at market open. AKAN. Oh my God, rally. Gets his baby back to 40 cents. Then rest easy and all day while your money grows and grows. This is what's crazy. I mean, reading some of this stuff is what's crazy, and you guys can't see it. So on FinViz, if you go there, stock twits, it powers some of the comments and things of that sort. There's no news on this. Cultivation, manufacturing, and distribution of cannabis. ACAN needs a solid push with volume over 43. Let's go take a look at ACAN on Active Trader Pro. The volume not coming up to what it was yesterday. I would not hold this one into a weekend. Here's the deal. 90-day volume, 2 million shares. 10-day volume, 16 million shares. So far today, 16 million shares have traded. The float is 11.59 million shares. So these are changing hands constantly, it seems. Let's see the 1 minute. I want to see the volume in 1 minute. Oh, come on. Work for me. I got to restart Active Trader Pro. Kudos, Sherry. Sherry, man, you are the master at momentum trading. You got to share with us where you find these. Which website do you go to? Grocery Money. Yeah, you don't need, Sherry, if you're trading thousands of dollars in these, you better have millions of dollars in your portfolio. I will trade thousands of dollars in these to move sometimes when I'm fairly sure. Like GSN, I put in, I think I traded somewhere in the neighborhood of $4,000 or $5,000 to make, what did I make? $300-$400, somewhere around there. Wasn't much, but I was sure that I saw in the move. This one's messy. See the volume from yesterday? It kind of took off when the volume kind of took off. It's got a similar volume pattern right now, but when you zoom in on a 1 minute chart, the RSI right now is at 63. The MACD's up there. You've got confirmation and it's moving up. But I don't trust that. If I look at the 5 minute, I'm sure it's probably similar. Oh, let me restart Active Trader Pro. Because it's just not working properly for me. And I'm sure it's going to freaking crash again. But I'll bring you back over to Safari View. But I literally couldn't find anything on here about it. It's not making money. It looks like it's 5% shorted. Performance this month to date, it's up 97%. Year to date is up 87%. There's somebody knows something about, something's going on within that company to drive this, or it's just literally a pump and dump kind of scheme, which happens a lot with momentum trading. And all you got to do is make sure you're out. And Sherry, man, grocery money ain't no joke these days. If you listen to Biden, Chuck Schumer, he was the one yesterday spouting off. God, look, it's at 46 cents now. We were just looking at 30. That's a 1 minute chart. It does have the volume now. You're at the day's highs. God, come on, Active Trader Pro, move for me. 48. Sherry, great play on this one. God, I wish Active Trader Pro worked a little bit better. This is the freaking Intel chip that I'm on. Screw Intel. The danger you have now is this move halting. And I wonder if it is halted or if it's just my Active Trader Pro. Because that's a 1 minute candle. Let's see. It's Active Trader Pro. No. Yeah, it's not halted. It's definitely my Active Trader Pro. I can hear my dog snoring. Sherry, did you get out of Faraday? There we go. Active Trader Pro is just acting up. You might be going back to this, 60 cents? I don't know that it's a rug pull, but it's definitely, it's momentum. It's just, I mean, don't discount that. Sherry, you're greedy. You should have been out of Faraday. Don't let greed make you get slaughtered. I usually try and scalp on the 5-minute chart. So if it breaks down, you can kind of get out. But Sherry, and I don't know your situation, but pattern day trading rules, if you have a limit, then you're kind of, that's where I always get. In my Webull account that only has $1,000, that today is worth $1,200, that I started at the beginning of the year. I can't trade in stuff like this because I don't want the rug pull happening. Wow, really, Chris? The M2 Air, I did the Pro. I think the M2 Pro, and I've got the M1 Pro, and I got to tell you, the M1 Pro. Yeah, see, Sherry, high five. You and I are both in the same boat. The M2 Pro, my buddy got it, and I need to text him. I'm going to text Travis right now. Why do I have all these texts from? Let me see. What's my dad yelling at me about? Oh. You guys want some family drama? This is good. Parents were aggressive investors over the past 20 years. Very good. Held on a little too long. I yelled at them that I was getting out last year. They said, "You're crazy. It's coming back, blah, blah, blah." I said, "No, it's not." We all know it didn't come back. Meta at 150, by the way. Oh, my freaking God. I need to yell at my mom, though. And my mom and my dad. Let's see. Where's Travis? Travis is the one I want to... The M2. Okay. My dad is yelling. I guess he has Intel. And if you guys didn't look, Intel, by the way, which I would never recommend. There were people recommending this because it's got, I might recommend it down here. Let me see. What's the PE for it? It's down 8%. It was down as much as 10%, down to 24 and change, I think. 26.78 is where it was low for the day. But let's take a look at it on the algorithm. And then I'm going to start the podcast because it's already freaking 10 o'clock. But Brandon, I hope I explained Palantir to you. I don't know that I'd necessarily get into it. It's a good trading stock right now. I just don't think it's an investment stock. And the reason I don't think it's an investment stock is the PE. They're not making money. Their forward PE is 45. Their price to sales is 7. They're only expected to grow 58% this year, but next year it's 250%. I think with their earnings coming up, let's see, when are Palantir's earnings? And then I'll take a look at Intel. Palantir's earnings, they're coming up next week. You could hear something good, but most likely their guidance is going to be just, hey, we're continuing on. We're expecting a recession. You probably see it pull back to a shelf of around 689, 670, somewhere around there. If you look at the long term of this one, if we just look at a weekly chart, it doesn't even have enough to pull up a 200-day, but it's barely hanging on to that 9-day at 710. The 21 days at 760. I just don't see it above this 9-day long enough to say we're in an upward trend. It's going to be an uphill battle on that one. Intel on the other hand, but I say that with knowing you can trade Palantir and make some money. In fact, if you trade Palantir on the option side, I have some folks who absolutely 100% make money on that. Intel's an interesting one because with all the other chips, they were just moving in this ascending triangle, and then you broke it right under the 200-day. So you were in at 26.13, and today you're at 27.65. I think you head back to these lows at 26 something. I think if you get into Intel, you can see the double bottom here. If we just pull up Intel here, the problem is their technology sucks. They're spending too much money on their factories, and it's just nobody wants to go work for Intel. That's positive. Truist hold 29. This is funny. January 23rd, before the earnings came out, Truist said hold it 29 to 33. They upped their price target. Susquehanna same day negative, but 22 to 24. In November, Mizuho neutral, $32. Look at these price targets from these monkeys, and you're trading at 26 right now. And this guy, whoever Truist was, moved it up to 33. I don't understand it. Performance year to date, you're up 13%. I think you're putting in this top at about 30. So in my mind, I think at some point you buy this one at 26 and wait for it to go to 30. And you just buy and sell that one. The algorithm doesn't do a great job on this one. The algorithm over 1,000 candles, you lose 55%. Buying and holding, you lose 47%. There's 38 positions overall. 11 were winners. Your max win, your average win is 4.8. So I think there's better places to put your money, but if you want to bet on a chip one, I think this is fine. But yeah, okay. Now I got to start doing the podcast. I'm gonna start. Okay. Good morning. It's Friday, January 27th, and I should probably say good afternoon because all you guys listening in the afternoons to evenings is what I'm seeing. But I did want to start it out with a Trendspider kind of quote-unquote warning. I guess I talked about bots yesterday. I know I personally do not trade with bots. One of the listeners who does trade on Trendspider with bots, and he trades on other platforms as well, said he wanted to alert people. Just some disclosure that I discovered running bots with Trendspider that you may want to mention to your viewers. Different exchanges sell their data to the Trendspiders and trading views of the world, and all of these other programs run off. So if you run a bot off Trendspider, you really want to be making sure that your Trendspider data matches the data with your broker. Paper trading testing was outperforming every asset, but once I switched to live trading, I realized it's not purchasing and selling orders at the specified price of Trendspider's bot because it doesn't match my broker. So if you run a bot, make sure it's being run off, I would say, a 4-hour, one-day candle. Unless Trendspider's data coincides with the broker's, don't day trade. So he's warning you about bots. I would warn you about bots too. This particular listener, I've talked to him before, and I have told him I don't trust bots. I don't trade as bots. I know I said you can trade as a bot. You can do it. I mean, test it out. I've tested it out before. I just don't trust it. What's nice about the algorithm that I said I would trade on a bot with the 65-minute, where we said, hey, over the eight-day EMA, and buy it when it crosses up, sell it when it crosses down. What's nice about that one is it's a 65-minute candle. So I can get a text during the day when I want to do that. One person posted in the private Facebook group about COMS being in a short squeeze. It does seem like COMS is in some type of a short squeeze. The volume is super, super high. The 10-day volume is 63 million shares. The 90-day volume is 59 million shares. It's in a slide right now. This one is trading at 9 cents. I would worry about that a little bit. I don't think that you get into this one unless you're willing to, trade it within like a 5-minute kind of thing. The candles are super tight. This one, they're talking about it on Stock Twits about, being short and going to 40 cents. I just don't see it. And again, I have in my notes, I talk about the short squeezes. It's a Friday. Guys, if you want to play the short squeezes, play the short squeezes. There's one that Sherry in the on our YouTube right now. She's been trading this one, AKAN. This is just legendary, by the way. Got in early this morning at like 40 cents. It's now at 53 cents. I'm sorry, it was at 36 cents. Sorry, I'm getting a bunch of phone calls here. I'm turning that off. But I got 36 cents down here. So you're at 53 cents right now. It's still moving up. So I kind of do that. Now, I was kind of joking a little bit with Kathy Woods, my ARK K, her fund. And this is where it goes into, hey, you've got to understand it's all about timing. ARK K is up year to date. I think it's like 20-something%. And God, CNBC is just horrible. I just don't like their website sometimes. I love doing their comparison, but sometimes it just doesn't work. But when you look at year to date, ARK K, which is her flagship, is up 38%. Okay? If we compare, let's compare it to Berkshire.B, which is Warren Buffett. So ARK K is up 25% year to date, 24% year to date. Fluctuates between 24 and 25 with live trading. Berkshire B is up 0% or 1%. Before it was up 1%. So it's just, at 0%. It's all about timing. If we go to 1 year, though, ARK K is down 44% and Berkshire is just at 0%. If we go to a 5-year chart, Berkshire B is up 45% and ARK K is down 3%. That's where the difference between buying and holding and trading is. Because if I put in Apple into this same comparison, over 5 years, Apple is up 224% versus both of those. ARK K being down 3% and Warren Buffett being up 45%. If I go to the 1 year, then Berkshire B is still at 0%. Apple is at minus 9% and ARK is at minus 44%. If you go to year to date, ARK is up 25%. Apple is up 12% and Berkshire is at 0%. It's all about timing when you look at these things. And so my point being, take a look at the timing of the things in your portfolio, because if things aren't working, it's not too late to get out. It's not too late to get in. It's all about timing. Chevron reported this morning and their earnings were weak and they're getting a ton of political backlash for their buyback yesterday and for their increase in dividends and blah, blah, blah. Earnings per share, $4.09 versus a $4.38 estimate. Sales, $56.47 billion versus a $54 billion estimate. So their sales were up, earnings per share down. It's doing, let's see, where's CVX right now? I'm making sure that I'm on CVX. Let's look at CVX. CVX is, man, I wish Active Trader Pro worked well. 182, down 2%. It is not part of the core portfolio. Instead, I have Exxon as part of the core portfolio. I have Oxy as part of the core portfolio. I have MPLX as part of the core portfolio. I have Devon as part of the core portfolio. In fact, Devon is up 1.63%. Oxy is up 0.75%. MPLX is up 0.52%. Exxon is down 0.3%. So Chevron just ran too much. The earnings were not justified. I have a feeling you're coming back into the 170s on Chevron. It's just super, super high. That's all it is, but they did come out with their earnings and everything was fine. James wanted me to go over DO. I don't even know what DO is. Diamond Offshore Drilling. Let's see what this one. Ooh, that chart looks nice. $10.19 is where the algorithm got you in. It's funny because it got you in at $8.98, got you out with a 6% gain on a kind of button hook here, but it got you right back in at $10.19. You're at $11.77. The RSI is pretty high at 63. The MACD is crossing down. Indicates that maybe you're starting to get a button hook here. It's still kind of on that 9-day. It's not above the 9-day. I would say if we pull back to 1150 or so and you get closer to that 21, you might want to cut it loose. But it doesn't show any confirmation of a huge button hook. Their earnings are coming up on February 10th. If I look at some of the fundamentals of this one, DO, they're not making money. Their forward PE is super high at 73. Price to sales 1.36, so they're on the verge of making money. Year to date, they're up 12%. Performance for 1 year, it doesn't even look like they've been a stock for 1 year, blah, blah, blah. There's no coverage of this thing. There's no insider buying. There's no insider selling. There's nothing. So I'd trade it. It's just probably not enough information to say, hey, hold through earnings. If you've bought this one early on at 10, take your 10, 20%. Take it and be happy. Because if I just let's look at a weekly. If we look at a weekly, yeah, it's brand new stock. You're trading well above the 9-day up there. The volume perspective looks like it. The MACD hasn't even really created a strike line. But if we look at a daily on this one, let's look at a daily. Your 200-day just started and it's down around 8, and you're trading at 11. The volume shelf, if I even just, let's pull this one back to kind of May 11th. Nobody's holding up here. Everybody's holding around 8. So I wouldn't hold this one through earnings, James, to be honest with you. So Fridays, what we do is we recap. I changed the format, and we're going to recap the week from the scans. And some of the scans that we saw on Monday, Qualcomm was the first one that came up. And Monday was, I think, the 23rd. Let's go back to Monday's price. It was the 23rd right here. And it was a secondary cross up at 122. Had you bought, you're at 130, 133 right now, and you still have confirmation. Even with bad Intel earnings, which, by the way, took it on the chin. I thought the chips would be down, but it looks like Qualcomm's got a green candle. Qualcomm's earnings are coming up next week, February 2nd. Their ex-dividend date is later in the month, March 1st. But that MACD is flying way up. The RSI is at 72. I would not get into this one. I think with their earnings, if they have anything to say that's similar to Intel, which they might, but probably not. Qualcomm's just a much better run company. You could see it gap down here to the 125 to 122. I think if it gets closer to that 200-day at 120, I think you pull the trigger. I think chips have just come out of this, and they're doing pretty well. XLK, which is the technology sector, on Monday we had a cross up. And this one on Monday, we go back to the 23rd. This one was trading at 131. You're at 136 now. Pretty good cross up. Square had a bad week, and Square had a downgrade, but it looks like it wasn't hurt too much by it. We go to the 23rd and you're trading at 76 and you're at 82. Pretty good cross up. Again, if you're looking for an entry into this, that was a secondary cross up because you're still in block at 61 and you're at 82. So that was a secondary cross up. Some of our Vanguard indexes that crossed up, VXUS, and again, this is just Monday. VXUS on Monday, if we go to the 23rd, you were selling at 55.80. You're at 56.59. Pretty good. Again, you're looking for entries. This one had entries earlier at 52. So it was a secondary cross up. Another sector, a spider sector, XLC, the communication services. This one crossed up. It's a secondary cross up. The initial cross up was back here on December 27th at 47. The secondary cross up crossed up and the trading at 53 or 55. 5% gain a day. Palantir crossed up, and I just went over Palantir for Brandon on YouTube. This one's a trade in my mind. And on Monday, the 23rd, you were trading at $6.99. You're at $7.30. It got all the way up to, it looks like $7.45. So not a horrible trade, but again, Palantir, I think it's trade. Didn't look too promising. It got you in at $6.45 way back in December, so it was a secondary cross up. Splunk had a cross up. And I think this is a secondary cross-up. Yeah, $89 was the initial cross-up. This is secondary cross-up. And on the 23rd, you were trading at $90. You're at $96. 5-6% gain in a week, and you still have confirmation. Pretty good. Netflix is one that, after earnings, they had this nice cross-up. You got gaps on the way down here. The 23rd, here you were selling for $340. Today you're at $363. I've said that you're coming to fill this other gap in at $350. You've filled this gap. That gap at $344 is completely filled. There's another gap here, I think, way back that still has to be filled at $508. Probably in the crosshairs at some point in time. Intuit, INTU. This is the TurboTax and Mint.com. I personally use Mint.com. I love Mint.com. It had a cross up here on January 23rd at $400.73. You're at $416 right now. 1.6% gain, somewhere around there. Pretty good gain. So those are Monday. And one last one is our South Park favorite, Shitty Group. This was a secondary cross-up. You had an initial cross-up here at $44 on December 23rd. You're at $51 right now. Pretty good move. Still has confirmation. The MACD is super high. The RSI is at 69. But those were Monday scans. Then we have Tuesday scans. Costco. Just simple cost is the symbol. And Costco is over $500. I wanted this one at $450. I didn't get it at $450. I'm kicking myself I didn't get it at $450. It's at $506. On Monday, the 23rd, this one traded down to $477. Could have gotten it at $477, which is a nice, 7-8% gain? Simon Property Group, which is a owner of malls. If you haven't been to outlet malls, this one's up 0.57% today. This was a secondary cross up on January 23rd, and it looks like we were selling at 123. You're at 127 right now. Their earnings are coming up next week, February 6th. I kind of expect them to say, hey, consumer over the holidays was shopping. It's usually what they say during the January call. I followed this one for quite a while. Quite a big dividend on that one, by the way, too. SPG. Viper or Venom Energy, VNOM. This one had a cross up, and it was a secondary cross up. You were trading at $32. It's at $33. Not a huge move. This was a secondary cross up. The initial cross up was at $31.40. Not enormous. You got a big spike yesterday of selling that kind of brought it down, broke the 9-day. It is what it is on that one. Energy has kind of just moved a little bit. In our levered ETFs, Mary, David, UMDD. This is a secondary cross-up. This is a mid-cap bull, Ultra Pro. $17.79 was the buy here on December 27th. This was a secondary cross-up on January 23rd, and it sold for $20.60. You're at $21.54. Not a bad move. Not a bad move at all. 5% in a week. UMDD. URTY, which is ProShares Ultra Pro of the Russell 2000. On January 23rd at 9:30, you were selling at $43, $43.92. You're at $47.48 right now. Ultra Pro of the Russell. Some of our Vanguard ones that had a cross up on Tuesday. Vanguard Mid Cap, VO. VOO is the S&P. VO is the mid cap. This one was a secondary cross up. You had an initial cross up in December at 205. On January 23rd, you were selling at 213. Today, you're at 218. Again, you're just looking for entries into the Vanguard ones. Another Vanguard one on Tuesday, VB, which is the small cap. This one on January 23rd, it looked like it had a pullback on the 19th. January 23rd, you were selling at 194. This was a secondary cross-up. You were in at 183. You're at 199 right now, about to cross 200. So, again, looking for an entry into that one. That was a pretty good one. eBay. This one, I told you, looked like a $50 stock. And on January 23rd, it was selling at 46. I said it looked like a $50 stock. It did not cross 50. It got to 49.47 on January 26th. And today, January 27th, it's at 49.52. I said I thought it would run, but it's had quite a run. I didn't know if it was a secondary cross-up. The initial cross-up was at 41.45. If you got in at 41.45, you're doing really well, and you still have confirmation. So eBay was clear. And then on Wednesday, we got Bank of America. This is in our core portfolio. It is up. Today, it's at 35.54. On January 25th, we got a cross up here at 34.30. So you're up $1. Not bad. Pfizer, we had a cross up, and this was a beaten down stock. And I said I wasn't sure where this one was going. I warned you about this one. 45.03 was the buy-in. 44.29. Here's the kicker on this one, though. You got the dividend. So you got the dividend. You lost some money. Their earnings are coming up next week, January 30th, early in the week. It doesn't have confirmation. I warned about this one because it's below the 9-day. It's just gotten beaten all the way down from 51. Remember, governments aren't buying the vaccine. So they're taking a little bit of a hit, less of a hit than Moderna, which is a one-shot pony. SCO, which is the triple levered short of oil futures, Bloomberg oil futures. This one was a buy at 23.30. Unfortunately, it's down at 22.54. Energy's had a pretty good week so far. So I didn't buy this one. I thought it looked good. I mean, it looked like it broke that 9-day, but it's lost confirmation. Do not hold this one in the weekend. If you got into this one because of me, get out of it. Don't hold it through the weekend. I would say just sell it at, if you can get it up to 23 today, that'd be great. Right now it's at 22.54. I would get out of that one. Just who knows what's going to happen over the weekend, and you don't want to hold one of those. SRTY, this is the other one that I thought looked really good. It's the short of the Russell 2000. And ironically, we have a cross-up today of UTRY, which is the opposite of this one. And this one, 44.88. Today you're in at 42. You're at 42.06. So you've lost money in this one. I thought this one, again, remember, don't listen to a guy on the internet. VIG was our Vanguard, which is the dividend appreciation, which I actually liked this one. This one had a cross up 153. 153.53. You're at 155 right now, and it pays a huge dividend. What's the dividend on this? I think it's 4 or 5%. 1.91. Oh, dividend appreciation. So it's a 1.91%. I thought it was bigger than that for some reason. Cisco. Cisco's one that you just kind of, it's not super flashy, not super great, but it's grown more than other technology. It's kind of like IBM. 47.98 was where you got in. Today you're at 48.36. Their earnings are coming up February 15th, a couple of weeks. Nothing, and I believe I said this. It's nothing super exciting. ATVI, Activision Blizzard. This is a $95 stock because that's what Microsoft wants to buy it at. We had a cross up at 75. I say it's under the 200-day. Probably not a bad bet. You're at 75.51. Hasn't moved a whole hell of a lot. It's got confirmation. I wouldn't expect this one. Your cap on this one, your tops, is $95. Probably won't hit that anytime soon because of all of the lawsuits that are going on. AVGO, which is Broadcom Communications, which is a great chip company in an ascending triangle. 577.67 was the buy-in. You're in at 597 right now. It's touching that 600, and it's got all the confirmation in the world. So AVGO, and that was our Wednesday scans. Thursday, our scans brought us to J&J, which again, remember, governments are kind of cutting healthcare. 169.55. If you bought at 169.55, I don't think it's a bad entry price. I think you're fine. Honestly, I think you're fine. This is one you hold for a few years. Look at the MACD way down there. Yeah, you're at 168.27 today. But if you didn't buy enough, buy a little bit more. Your floor here is at about 167. I can't guarantee you that it's going to go down to 167, but that's where it is. By the way, NVIDIA over 200. Meta over 150. So J&J. Pepsi was our next. And sorry, my ADD caught me. But Pepsi is another one that 171.63. I had mentioned it, while it had a button hook and it looked good, I hold this one. I don't trade this one. This is one, I love cola. So I've owned both Pepsi and Coke. You got a gap down here between 164 and 166. If you're holding at 171, not horrible. I bought probably much higher. I think my dividend was reinvested up here at about 180. I'm not too worried about it. It'll get back up there. But that gap was kind of moving there. The earnings are coming up February 8th. Not a bad one. KOLD had a cross up. And we have seen huge moves in this one. You're finally getting some type of button hook on this 4-hour. This was a secondary cross up. On January 23rd, you were trading at $44. You got all the way up to $54. You had your 10% move. If you bought this on the scan on Thursday, you got it. You got it. I mean, you got your move. So KOLD was one that went. UDOW, which is an ultra of the Dow 30. This was on just yesterday. And 59.84. You're at $60.59. Pretty good move. I mean, again, it's not meant to be a day trade. This is meant to be a swing trade. You've got the momentum. Particularly, I would probably sell this today. I don't necessarily would hold it through the weekend, but I don't think you're crazy. American Express is up 10% today. That's kind of what's holding up the Dow. Some of our Vanguard VYM, which is the high dividend yield. This was the one that I thought was high dividend. High dividend yield, 110.19, trading at 110.50. This one's not going to move a whole hell of a lot because it's a dividend play. VYM pays 3.79%. Pretty good dividend. So it's just, you kind of just hanging above that 200-day. Under 100 would be a great play on this one. Don't know that you're necessarily going to get it, but XLP, which is the spider sector for consumer staples. I went over this one yesterday. It looks like it's using that 200-day as its support level. 73.25 today you're at 72.78. So AbbVie I went over yesterday. We kind of looked at this one yesterday. You can listen to yesterday's podcast. Crossed under the 200-day, has no confirmation whatsoever. 147.92, you're at 147.09. I would expect it down at the 145, maybe even the 143 levels, just based on those volume shelves. The MACD is super far down. The RSI is at 27. It can go down even further. Mondelez is one that we went over yesterday. MDLZ. And this is one that you could buy into. It's broken the ascending triangle. 64.85 was the buy. Today you're under the 200-day and the 9-day. You have no real confirmation. Their earnings are coming up next week. I would expect to see pretty good earnings out of this one. If you go long term and you look at a weekly chart of this one, it's kind of close to that 50-day. 63 might be your bottom on this one. If for some reason you can see heading into earnings last time, they popped on earnings on the last one. You can see it went all the way from 50 up to 60, almost 70. So I would expect them to be doing fairly well. So today's scans, ones that I think that you could buy and hold over the weekend that have crossed up and show some confirmation. Oxy, OXY. This is Occidental Petroleum. Their earnings are coming up February 27th. This one has just crossed the 200-day, which is at 66. Should have some continued confirmation. Oil is one of those things with Chevron kind of announcing their buyback, announcing their dividend increase. They're seeing some problems politically. So Oxy may have some type of problems, just kind of getting lumped in there. So I don't know that we're going to necessarily see them pump their earnings to say, hey, we're the greatest thing since ever. Target is one. This is a secondary cross-up. I said down here at 143, I think it's an absolute buy. This was December 27th. I did not sell this as part of my capital gains, my tax loss harvesting, just because I don't think it's done. I think you've got this 177 right in the crosshairs here to fill this gap. It's got super, super strong momentum. You've got your dividend ex-date coming up February 14th. Valentine's Day, give Target a kiss. February 27th is their earnings. I think you could buy this one and hold it. I own at a higher price. Lower price. I think I bought it 111, but it's been years, and I've slowly gotten into that one. Goldman Sachs today crossed at 354. You can clearly see it's using this 200-day at 342. Their book value is 300. And back here when it was just below 300 back in October, I said buy this all day long. You went all the way up almost to 400 with a 20% gain in the algorithm here. You've since come back down. I think that 200-day is providing you support. And I think it's probably a business that's pretty good. In our core portfolio, again, these are all in our core portfolio, and that's on Trendspider. But Devon Energy is one that also crossed up in our core portfolio. It's a secondary cross up. The buy here at 61 back in January 6th was the buy. You've just kind of touched the 200-day. I would expect it back above the 200-day. I would expect it back at $72 level. I think you can add to it. Since it's a secondary cross-up and the RSI is at 66, if you want to get in on this one, I would just add smaller batches. You do have confirmation, so I would just add a small batch. Say you want to own $1,000. Say you want to own $100 of this. Buy $20 of it today at 66. Your earnings are coming up February 14th. Again, kiss Devon. How much better, more romantic can you get? I posted this one on our private Facebook group, $12.19 for DRN. This is the triple levered real estate bull. So we're expecting the real estate market to go up. This is a secondary cross up. The $10 mark back here on December 29th was the time to buy because you're at $12.39. You've made 20%. Kudos to you. In a month, you've made 20% on this triple levered real estate. Even while real estate is considered going down, this one has gone up. So UTRY. Where is our? I know this is an Ultra Pro. So let me go into our levered ETFs. URTY. I just went too fast on that one. URTY, which is the Ultra Pro Russell 2000. This is a secondary cross up again. I think this was earlier in the week as well. But it's just kind of crossing up, but it still got confirmation at 46. The algorithm got you in at 37. You're doing really, really well on this one based on the algorithm. VWO, which is a Vanguard, emerging markets. This is a secondary cross-up. This one just has had a huge run in the month of January. Got you in December 29th at about $39, $39.44. You're at $42 right now. This is a Vanguard. So you're just looking for entries. It's a secondary cross-up. I don't know that I'd necessarily add to this one right now. The RSI is kind of at 67. It's a little bit overbought right now. So VWO, I would kind of maybe not get in. Another secondary cross-up that we had earlier in the week, VB. This was a Tuesday one, which crossed up. This is another cross-up. The RSI is super high, 199. Looks like it's crossing that 200. I don't know that I'd necessarily enter into this one, but again, it's kind of a Vanguard, and you're just looking to get in. VNQ, to go along with our DRN. This is the Vanguard Real Estate Sector ETF. The initial buy-in was in December at $82. You're at $89 right now. This is a secondary cross-up. The RSI is super high at 65. I don't know that I'd necessarily get into this, but the fact that DRN and VNQ, both of them, I mean, real estate market might be getting ready to either crash or move up significantly. XLV, which is healthcare, has crossed up. And the cross up is at 133.77. You're trading at 133.38 right now. This one goes with, and if you haven't gotten in, I don't know that it's necessarily too late, but UNH is one. It's been hovering between 485 and 490 for quite a while. The algorithm has us in at 484.76. I think my average purchase was 485. I've added a couple of times at 485 during this week. The MACD is kind of low. It's not moving anywhere specifically, but you are seeing kind of a button hook here. So I'm slightly concerned if you're looking to trade this. If you're looking to own it, it is expensive. Just be aware, it is the most expensive healthcare name that you can buy as far as healthcare managed providers. The PE is 23. It's got a 1.34% dividend. Year to date, it's down 7%, up 7% for 1 year. So it's kind of been floundering around. I've said under 500, you buy it. Over 500, you sell it. But again, with XLV, that one had a 133, and it looks like it's got some weakness going on it today. So I don't know that I'd necessarily get in. The RSI's in no man's land. I just brought it up because it crossed up. So I think that's it. If you have any questions, hit me up. I wanted to go over Meta. Meta, it has just been nuts. With the talk of TikTok kind of being, given, not allowed on state devices and things, Meta has quietly, and I mean, quietly moved a ton. And it's got this gap up here at 167 in its crosshairs right now. The algorithm, we had a buy on November 7th at $95. You got out with a 22% gain on December 28th. But then 2 days later, December 30th, got you back in at 118. You're still in that 118 buy at 150. It's at 150. Their earnings are next week. The RSI is at 79. The expectation for this company is not crazy high. If they spent less on the metaverse, the PE on this is 14. If they spent less and they show some growth on their earnings, I can see this a $200 stock just on the day of the earnings. Performance year to date, you're up 22%.
you're down 50% over 1 year. So your 52-week range is between 88 and 328. You're 54% below your 52-week high. You're 71% above your 52-week low. Again, it's all about spend on this one. It's kind of like Amazon. Amazon's the other one that I wanted to show you. Amazon is going nuts. This one, $83 buy-in on December 30th. And we can look at Amazon. The PE is super high. But like I told my friends, the PE on this one doesn't necessarily matter because they don't have a revenue problem. The company is doing better than ever as far as the revenue goes. The problem has been spending. And what's the easiest thing for a company or your personal budget to do? It's to cut spending. So they're cutting jobs. They're going to get this under control. It's a better company. If we look at Amazon here and I go to let's go to a weekly chart. This takes you back to pandemic. Right before the pandemic, it was an $86 stock. That's where it dipped to. At 102, you're basically just in April when we were shut down and everybody had to order groceries. Does that seem like, you got that pump? I bought way back in this area, somewhere around this. So I'm up, I'm holding. I haven't added to it, but that clear move right here at 102, if you just come up to the 50-day and you're at 121, that's a 20% move in a company that you don't mind holding because they're going to get it right. Again, their last one was 28 cents. Their earnings are coming up January 30th next week. So that's kind of where I want to finish this one. The Friday recap. There are companies that you can absolutely invest in and hold over the weekend. Some of the day trading names like AKAN, I don't know, this was at 56 cents. Let's see where it is right now. It's at 45 cents. Kind of lost its mojo a little bit. Those are the kind of companies you don't hold over the weekend. Amazon, Meta, you don't mind holding them over the weekend. Apple is up 0.85%. I got asked on YouTube Live, am I switching? I think it's close to 40% of my portfolios in Apple. Am I looking to switch out of this though? And because it's got such a huge run, I'm not looking to sell at all. It's still got confirmation. Their earnings are coming up. Their earnings are going to be bad. That's baked into the stock. Whether your grandmother is going to cook meatloaf or chicken this Christmas, it's priced in the market. Everything's already priced in the market. There's nothing that Apple can say that's going to shock the market. Now, will the market kind of bring the stock down if they say, hey, we're not seeing the demand on the iPhone? Yeah, it's going to bring it down. But, you've got a pretty good base here at 120. If we look at the long term of Apple and we go to let's go to a weekly. You're under the 50-day. The last time you were under the 50-day was 2019. And that was at $40. You quickly moved up above the 50-day. You're quickly moving up above the 50-day. The 50-day is at about 151. You're quickly getting there. And the last time it moved under the 50-day kind of just for semi-extended was May of 2022. It took till August to get back above the 50-day, and then it dipped down again. So I just think it's using that 50-day as its support. If it gets down to this 200-day, buy it all day long. This company makes so much money. Costco over 500. We went over this one as earlier in the week. It was a secondary cross up. I made a mistake on this one. The other one that I made a mistake on, and I'm still kicking myself because it's up 4% today, is Tesla. Tesla up 4% today at 166. I said yesterday, is it too late to buy? No. Did I buy any more? Hell no. Could have gotten in around 140. The algorithm has you in at 119. When I sold? I sold at 119. I sold right around the 120 mark. The other one that's up that I should have been adding to a bunch in the 120 level and the 130 level was Snowflake. 135 was the buy-in. You're at 159, 160. I think my average purchase price right now is like 180 on this one. So I'm doing better than most. And it's in a retirement account. So I'm just holding on to that one. The money's not going anywhere else. I don't want to trade in and out this one because this one's earnings are coming up. Looks like probably March. There's no catalyst. They just had their earnings back in November. So there's no real catalyst. The MACD is kind of moving up. The RSI, super high at 67. I'll bide my time. NVIDIA is up over 200. I just added NVIDIA to the core portfolio. It's got too much momentum. It's too good. Their earnings are coming up on February 22nd. Even with Intel's horrible quarter, NVIDIA is moving up. This is Jim Cramer's favorite stock at about $600 a share. So if you have any questions, hit me up. Have a great weekend. Let me know your thoughts on anything. The Friday recap is just to kind of go over if the market had taken a drop, then these kind of great calls would have been horrible. The market's really, really good right now. I don't know for how long it will stay really, really good. And the Fed has a way of bringing that down. But with Microsoft kind of holding on through their mediocre earnings and a 5% move midday, I can't imagine that next week's earnings of Google, of Apple, of Meta, I can't imagine these things bringing the market down, even if they have mediocre earnings. Look at what Microsoft did. So any questions, hit me up. Thanks, you guys. See you. Okay, export song to disk. Export. Okay, now I got to read your freaking comments. Christian singing "Oh Sherry." Steve Perry. I think I saw a Family Guy clip yesterday where it said he was singing a song to a girl, and it was Stewie was singing a song to a girl, and Brian goes, "Oh, a song about with a girl's name. Yeah, that's unique." And he's like, "Name 6," and so Brian names like 6, and then he goes, "Name 6 more," and he just keeps going like a ton. You don't see what's bringing the market down. A firm up. Honestly, VRO, here. I will just look at SPY. Since SPY is our tracker of the S&P. And I will look at a weekly. Take a look at this. You're still in a downward trend of that 50-day, but you're still in an upward trend of the 200-day. The 9 and the 21 are both moving positive, and you're closing above that 50-day. So from a overall market perspective, do I think that we have more room to go to this high of 5,000 or so? I think that MACD is low enough that we could probably move up to probably the 420 to 430 level on the S&P and not have a problem. The RSI is only at 54. It's not oversold. It's not overbought. It's dead middle. Next week with your Fed decision, that's where we could get screwed. Jay Powell could go, you know what? Markets have been doing really well, and all those growth stocks, I don't like them. I know we've been out there saying that we're going to do a 1/4 point hike, or is it a 1/2 point? I don't know which one at this point. We're going to do a 3/4 because it's just too hot. 11 a.m. Pat Gelsinger from Intel is on CNBC. Is a firm way up. Let me switch you over to Active Trader Pro so we can do some day trading. AKAN hasn't gained its momentum back. This should be moving. It's not moving. I think all of the freaking risk on assets are moving up. Yeah, look at Affirm. I'm still not in ARK. And VRO you missed. The comparison of ARK, Apple, Berkshire. We're going to save this. And I am going to upload the podcast. And I know I let one of those kids down who listens on the way to school. Larry. Oh, wow. Guys, don't invest in Spotify, man. They're paying me too much money. 127, 1040, yeah. VRO, I mean, it's personal preference. I like vinyl couches, walking shoes. I think I like I think Pedal Rider was pretty good. I think. No. What about Rodney? No. Swapping Tubes, I think. No. What's walking shoes like? Let's do West. Insert ad. I would say ETFs should be a part of your investment because they manage your diversification a little bit better. Personally, I could probably not manage my entire portfolio without ETFs. You know what's funny? Whenever I don't put buy stocks now or something, nobody listens to the freaking out podcast. You guys are the diehards who are on here on YouTube. I'm going to post this and I'm going to post it later on Twitter. Okay. We're going to say ARKK BRK.B Meta Amazon COMS I'm going to say I want to keep an eye on AKAN 10 likes. That's nothing. We didn't get anybody because I didn't change the freaking title. I need to include like stocks, the freaking baller stuff into it. I like, man. Qualcomm, DVN, CVX, Devon. What are today's cross ups? Oxy. Target. I love Target. DRN. SPY. Okay, COMS. Okay, versus BRKB. Okay, everything's got the dollar sign. Now to name the episode, I'm going to say 127 23 update. Okay, we're gonna publish this now. Copy. And I am just gonna do a couple of Twitter posts. I think I might add more. I haven't added in a while. I've done a couple of buys this week at 485. I had a couple of limit orders at 485 in. But my only fear is it has been healthcare is kind of in a downward movement, and so I'm slightly concerned. DO James, man, if you're trading DO, it's a great trade. Man, and Anchor's doing it again. Anchor, man, you're killing me. Let me see. Let me see if I do this. No, it just opens up. Let's see what happens here. We're going to put in tweet. Let's see what happens. Profile. No, it did the same damn thing. I should just tweet it out from. You know what I'm going to do? I'm going to do this. Hold on. We're going to go to Spotify. And we're going to go to. I'm going to close this. And we'll go to library, daily stock picks. Oh, it's not even updated. Okay, it hasn't even populated to Spotify yet. But I'll tweet it out from Spotify later. I'm pissed because when I tweet this out, it doesn't put my picture up there. It puts up this damn Anchor photo. We're going to put and we're going to put TQQQ, SQQQ, QQQ. We'll put
BZFT, Intel, QNCX, and that's it. And I'm due 3 of them. We'll tweet those out. Okay. Boom. That's it. It's 10:53. Let me move you over. Yeah, like I said, do not invest in Spotify right now. They're just paying me. I mean, honest to God, I'm thankful for it. And I'd love to ask you guys for more tips. Specifically because I know I'm making you effers a lot of money with some of this stuff. Sherry's making you guys more money than me, though. Honest to God, Sherry's the one that Sherry, throw up your Venmo. Okay. I need to go back to live on this. Hey, by the way, has anybody been to my Linktree? Do you guys use that? It's probably beneficial for me. I see some. I don't pay for the premium version. But I do see some traffic on it. I'm pulling it up right now so I can show it here. But I can't view the analytics of it. Affirm VRO. Here, let me move you back over to Affirm. So Affirm is one that this is the buy now, pay later. I'm putting my words together carefully. They made their business on Peloton. Peloton has since moved away from the purchase of their equipment. Affirm is just a layaway program. I mean, you can see December 13th, downgrade, $13 price target. What are you trading at? $15 right now. Here, it's been a great trade from $8 up to $15.
the book value of a firm is $8.81. So that $8.97 makes complete sense to bump up here. Their earnings are coming up next week, I think. Yeah, February 8th. I don't know that you play this 200-day, which is only at $15.90. It's not far. What do they say about their earnings? Apple is competing against them. There's a lot of headwind there. I just don't know what the upside for a firm is. And since they're not making money, it's getting harder for them. But they are up 48% year to date. I just think that's because their book value, their cash per share is $6.16. So at the very least, this stock is worth $8 or $9. Now, in their earnings, if they come out and they have less cash because they've been spending cash, or their bad debt balance, people kind of defaulting, that's where you kind of get into this one. I mean, look, they're losing 86 cents a share. They're losing 65 cents a share. When do they start making money? That's kind of my thought on it, is you could probably wait for this to get back down to 8 and then ride it back on its hype train when growth stocks start coming again. You look at Boeing. This is a great example. Boeing down here at 120, 129 was the buy here. You're in this ascending triangle right now, but in all reality, you're probably coming back down to this like 188, 190 level. I haven't bought into this, but at 188, 190, I'm absolutely buying in this. Now here, you got 37 cents per share loss. You got $6.18. Then you got a $1.75 share loss versus a firm, which, Boeing is a money-making company. They just have to get some things. They're losing more money. So how this goes from here to here and what their earnings say, if they lose more than 86 cents a share, forget it. They're done. I wouldn't buy into it right now. But if I bought in at 9 and I'm sitting at 15, you best bet that 200-day sitting at the 15.84, I'm not being greedy. I'm taking my profit. So, okay, and with that, I am out. You guys have a great weekend. Hit me up in the private Facebook group if you have questions. If you haven't done it so far and you're still here, hit that thumbs up. Okay. Talk to you guys later. Have a great weekend.